Okay, hey, hit a boo-boo. He got ambition, baby. Look at his eyes. This week's the burgers, next week it's the fries. Hey, good morning, everybody. It is approximately 8 a.m. in Midtown Manhattan, live from West 44th Street. This is Forex.Today. Very cool. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Wow. Almost 19,000 foreign exchange traders stationed around the world. Whether it's New York City, or Tokyo, or Taipei, or where? Shenzhen? London, Paris, Joburg. Hey, anyways, good to have you. Good to have you here. Thank you for being on my journeys with me. Please ask questions. I will do my best to address them. The overriding goal of today's live stream is to plan tomorrow, to plan next week, to plan next month, to plan the rest of the year. So this isn't about me putting you into a bunch of trades. You should already have plans for today. So today is already irrelevant. You're either making money today or you're not making money today, but you shouldn't be like figuring things out today. So we will talk about today, tomorrow, next week, all that kind of stuff. Hey, let me get something to clean my glasses. Hey, look at this. I'm on the other side of the hotel room and I still have a mic. Isn't that cool? Nice. All right, so I got my coffee. How about you? Happy Friday, by the way. You guys ready for the weekend? Not yet, man. We got a whole trading day. What are you doing looking forward to the weekend? So, anyways, ask questions, get involved. Fair game here. Technical analysis, fundamental analysis, all that kind of stuff. Cool. I'm going to probably have to keep this short because this process of YouTube and OBS and MetaTraders and having Chrome open so that I could see chat is just, I don't know, too much sometimes. So we will do. Hey, Joe Moo, are you in town? So yeah, just a quick get together happening tonight, 5 p.m. at the Harvard Club, New York City. We'll go up onto the rooftop. So Johnny, come in, you'll go through security. I'll put your name on a list, that kind of stuff. And I guess they'll guide you to the roof. Okay. And I'll be the only one standing there. Dude, I had a meeting here last night and it was great. And I had reservations in the amazing hall, just amazing dining room here at the club. And oh my God, it was completely empty. Like we would have been the only people in the entire dining room. And it's like having dinner in a church. Like it's just, it was just strange. So I'm like, you know what, let's get out of here. Let's go somewhere else. So, so most likely we will own the rooftop. So, but you never know. Friday, New York City, boom. So anyways, I'll see you here on West 44th. All right, guys. I am looking at weekly charts here, and that's really what we're looking at is the potential turn of direction. Because what we are talking about is not what's happened the last 8 weeks. What we're trying to plan on is what's going to happen the next 8 weeks. Okay? You understand? Right? So just because the Aussie's been down doesn't mean it will be down. Just because the Euro's down doesn't mean it will be. And the tricky part of investing is sort of timing the change of direction. Right? And that's where maybe seasonality comes in, but you can't use seasonality as an excuse to be sloppy. Like you can't buy Aussie dollar as it's falling. But the question is, with seasonality, is this short-term rally, just sort of week over week, is it important or is it just a blip in the matrix? This is where now your macro research And you'll say, well, if you look at the export data recently released from the Australian government, exports are up in certain categories like iron ore and coal. Not up a little bit, up a lot. So the interesting thing is you're like, well, will this change? And if it is, change from it's been bearish, for months, will it turn bullish? And if so, how do you as a trader safely catch it? Okay. Oh, and by the way, I installed these indicators yesterday. Some people said it's not working. It's working for me. This is MT4. I went to the site, downloaded the auto installer, ran it. Here it is, done. And if you use an ECN, there's an ECN version of the index too. Okay. This is not an ECN account. It's a VAR account. So it'll work. Yeah, anyways, so there you go. So all this was just downloaded yesterday, and you see, look, it's quite nice, quite nice. All right, so let's take a look at the commodities. Boy, I need a light, don't I? It's dark in here. Oh, it's old. All right, gold. Look, cool, right? Another little move here. So here's the thing. Okay, bears are going to sell it this morning. Even if they don't, I still have to think it. Now, why would I think that? Well, that's what technical analysis is. Okay, maybe, right? They think the Fed's not going to announce a taper. They think the bond market's going to rally again. They think bond yields are going to fall again. They believe the US dollar is going to get strong as foreigners front run the Fed in the well, there's no T-bills left, but in the T-note market, okay? And that dollar will get strong. That's what they think. Now, if I had that narrative, the way that I would set up the trade using technical analysis, because remember, technical analysis doesn't tell you really, it shouldn't. I mean, it could, but I'm going to say it shouldn't tell you up or down. What it's telling you is at what price, right? Price over here. At what price and over here, what time would it be a good opportunity to pull the trigger? And so you do some analysis and you say, well, there's a role reversal. And then we have this little algo, which is looking at, this week and trying to predict next week using again, a form, if you will, of standard deviation. Okay? And what they're saying is, based on all this gobbledygook math, is right, and is this. That's what it says. Will that happen? Nobody knows. Okay? But if there were bears and they were intending to sell, well, in the next 24 hours is probably a good time, meaning you're either going to front run on Friday or you're going to dump it Sunday, Monday, and they will take it down. Does it mean it will happen? No. But it also means this is probably a pretty dumb place to buy it. What kind of buffoon buys it at resistance? It's overpriced. So a bull is probably looking to buy something closer to a double bottom. Maybe the higher low, but whatever, And they're thinking this way. Okay? Let's try it that way. Okay? Okay, you see? So all I know is that this is not a good place to buy, but you can buy it. If you were going to buy it, you would buy it at a lower price, not at this time. And then if you were going to sell, this might be a great opportunity. Okay? It looks like it's a 3A2 if I fibbed it. Okay? It's still below the moving averages. It's below this. It's below that. Okay? But I actually want this to go up. If you were to ask me, that's what the Wayne would do. Okay? I'm going to set up a poll. Let's see what you stink. Okay, 17 votes. Can we get a few more votes? We need at least 30 for it to be reasonable as a data set. Now we have 20 votes. Can we get minimum 30? Okay, we got 31 votes. Thank you, everybody. I appreciate that. I'll see if a couple more people will trickle in. And end. But 36 votes, 60-40, fall. Okay? Just slightly more bears than bulls. And that's really how the market works. I wouldn't be shocked, though, if we were to have, let's say, 100 people vote, it would get closer and closer to 50-50. Okay? That's why you need to know, truly, are you a bull or a bear? Because if you're very inconsistent, you're not on a team, you're just the one in the middle. You're getting in the way most of the time. So, bears, by all means, it's all yours. Okay, so gold, yeah. Okay, my oh my WTI. Okay. Strange patterns here, huh? Strange, isn't it? It's not like, it's not a good trend. I mean, that's what it comes down to. Remember, I said there are two important days in which you would consider leaving the market as a market participant, or to say it differently, there are 2 days in which many market participants leave the market. One is at or about the June Fed meeting, and the other one is the greatest day of the year, Canada Day, July 1st. Right? And here we are. Here's like July 1st. So the interesting thing is next week, I'm hoping to start to observe. It doesn't have to be next week, but I'm going to observe starting next week. Return to the market by market participants. Now, it's not like everybody ends their vacation 3rd week of August and everybody comes back to the market. But some do. It's a trickle at first, right? It's a trickle at first, but then all of a sudden we'll have a watershed moment by the time we hit September. Market participants will be back and probably trying to get some trades in before the big announcement by the Fed in the middle of September. Okay, so it's a key point in time, which kind of means maybe next week, if we're bulls, we can try to tiptoe into this. I prefer a bit of a pullback so I can buy it low. What I don't prefer is if I have to buy it out of position. So buying oil might have to be a Friday front run on this one, because I think your best available price for Monday occurred in London today. And that's what we call about a Friday front run. It's Monday's price, but you're not going to get Monday's price. If this is truly a bullish market and we're starting to get new flow returning to the market by traders, which could be the case, then if you wait till Monday, it's too late. And what'll happen is we'll be up here at 70 and a half, or at least through 70. And you'll say, well, now it's too expensive. You can't buy it at 70 because of all those risks. Yeah, so that's why you want to pick it up at 68. And that was sort of in here. So now, maybe on even smaller time frames, with that in mind, okay, you should be trying to buy this. Okay? Now, when I taught you how to trade oil years ago, and there's probably, I don't know, 4 or 5 different lectures if you search, if you took notes, but about here is the best time of day as a New York trader, right, as an American trader, to trade oil. Hang on, that's not what I want to do. Okay. Here. Symbol, trend line. Which trend line? Vertical line. Okay. Cool. So you can see, you know, maybe in here was an opportunity. Why this price here? Why did 68.25 hold? It's important on Monday. Is it important today, Friday? No. But it isn't an important number on Friday. I mean, Monday, sorry. Sorry. All right, bitty. Bitty, 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 can't you see? Sometimes your trades just hypnotize me. All right, here we are. What a lovely move. Okay? Now you might recall I was in here in a cash move, made 10%, exited on this candle. It did nothing for another week and now has broken out to the upside. And the thing is, probably a role reversal in play, and it's not a full one, but it's indicating aggressiveness in the market. It's not even a 382, but we were kind of talking about this yesterday, right? Like someone said, yeah, that's a good setup, but it's not a 382. I'm like, there's more to life than Fibonacci numbers, and I don't, honestly, 33 to me is just as fine as 382. 33.333 I think would work just as fine as 382. I think the reliance on the Fibonacci ratio is silly, honestly. So what is in play here? 4 hour 21, daily 5. Oops, now I got to really zoom in. Okay, daily 5. Okay, 4 hour 21. But the bottom line is people want to own it. I want the dollar to weaken. I don't necessarily care about Bitcoin, but maybe Bitcoin is the new gold. Cool. Great. Fine. Okay. The nice thing is when you're right, you're very, very right. Just don't be wrong. Like I said, a 10% return, internal rate of return, right? A 10% IRR. So in 3 days is not generally what we're trying to do, right? That was a cash position, so it was not a trade per se. But it's still interesting to say, oh God, look at that, right? It's $3,000. It was right? 10,000 in Bitcoin, and all of a sudden, 3 days later, it's 13,000. You're like, oh, I like that. Pete says, hey, can we do XRP? I don't want to mess around with these charts. I'm so happy that we've been able to run this webinar as we have been, but I don't want to mess around with anything. So how about on Monday, Peter? Morena says South Africa wants to regulate cryptos. Yeah, they all do now. They all do. Now, here's the really cool thing. The head of the NFA retired. The NFA regulates Forex. So the head of the NFA, really, truly the CFTC, which is the head of the NFA. So, the head of the CFTC, the Commodity Futures Trading Commission, Gary Gensler, retired from the CFTC and regulating Forex, and then became a professor at MIT on cryptocurrencies. I joined his class. Gary Gensler, literally over hours and hours and hours and hours, teaches me about teaches me about cryptocurrencies, right? He's the lead lecturer. And then when it was all done and I finished my MIT course and I get my certificate, he leaves MIT, gets hired to run the SEC, and the first thing he does is he wants to regulate cryptocurrencies. I'm like, that's my guy. That's my guy. There's my guy that taught me cryptocurrency. So now he runs the SEC, and now he wants to regulate that industry. And I'm like, right? So anyways, just to me, I think it's a great story. Somehow I just love it. I'm like, wow, that's cool. You got lucky. Yeah, I totally got lucky, because they asked me in the first class, they asked other students, like, why are you taking this course? And people are like, well, blah, 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 blah. And I'm like, look, I think it'd be really good to have the MIT badge on my LinkedIn profile. And I think it'd be really cool to mention that, I have formal education in cryptocurrencies. It's like bragging rights. And they all looked at me like, that's honest. I'm like, I know, right? Like, I'm 70 years old. What the hell? I'm in this class. Like, I don't care about any of this. Just give me this stupid degree. And people are always, like, amazed at honesty. What does MIT stand for? Made in Taiwan. All right. All right. So anyways, hey, euro dollar, let's go back through the psyche. I want to be long this. I'm waiting because it's not the right price or time to be long this. Actually, that's what I said a day or two ago. Now, it's probably the right price, but not the right time. Okay? And if we were higher, okay, and then got a pullback to about the same price we're at, I might buy it. Also, I am reading into this. I have to be honest with you. I have to be honest with myself, because I'm reading into it. I am looking through a lens that is thinking reversal. Because, again, of seasonality. So I see what doesn't exist, and I have to be careful because it's confirmation bias. Sometimes that gives you confidence to get into the trade early, but sometimes it gets you into stupid trades. And now you got to be careful, because you might not believe, you might believe it's a good trade when it's really a dog with fleas. You see what I mean? So you got to be honest with yourself. So What are some of the things I see here? Well, first of all, it's down. There's no doubt, and I'm a bull. Great. So I'm seeing in the future where, oh yeah, well this is going to break out, and then by the time we hit next month, this will be much higher. Okay, but that hasn't happened yet. So that's a theory of the future. I cannot confirm that with scientific methodology. So I have to now wait and confirm or deny it. But what do I have? Well, I see the bearish move. This is textbook a bajillion times over a bearish textbook trade. On the exact day, the exact price a bear would sell, they sold. So I look at that, I'm like, oh my God, there's real bears here. But remember, the first week or two, or really first 3 weeks of August, I'm still essentially neutral, which means I don't have strong conviction to take this north in the beginning of August, but by the end of August, yeah, I'd like to be on that team taking this north. So when I see this, oh my God, yeah, there's definitely bears there. Cool. Well, I'm not going to fight them. I was very nonchalant about it. I'm like, I ain't going to fight them, right? If I was going to buy it, buy a double bottom, right? This bottom to that bottom. Well, it didn't hit. Good. Well, don't buy it. But this hitting this target early in the month, and I would say the 10th or the 11th, which is when it hit that bottom, is early. See, if the 15th is the middle of August, the 10th is early August. And if you've gone through the swing trading course, there's rules of engagement for this, and it predicts something important. And now my job is to let that happen, or right? Let that happen, not make it happen, and then plan accordingly. Okay? Now, here's the projected target, right? But I think it's going to do this anyways. Okay? And I told you back in January and February that we're going to blow the doors off September pivots. We're going to smash September pivots. How many people know that to be true? That at least 6 months ago, we talked about September pivots going to be shattered. That we're not going for R2, we're going for R3. And by the way, I never said S2 or S1 or S0. I only said we're going to shatter the pivots, and we're going to go for at least R3, not R2. But I never mentioned anything about support, which also gives you this idea of direction that I'm expecting as well. Okay? Cool. So imagine all that's nonsense. Right, Lucas? That could be total nonsense, but it's still my hypotheses. I don't know if that'll happen, and I don't know how it'll happen. I don't even know when it'll happen. It's just all nonsense. It's a theory. It's a hypothesis. Now, is it reasonable? Well, I got 20 years of experience that says many times something similar to that has happened. Okay, great. So now I have to use technical analysis to confirm something like that is developing, and I need to place trades and make money. And then manage the risk, management risk. But half the risk management side isn't just moving your stop, it's having the conviction to maximize your return without taking more risk. And that difficulty is, how do you do that? You don't take profit. See, a trade here is worth about that. Let's say 100 pips. But the same trade here is worth 500 pips. Why? That's the alpha. Okay, the alpha is understanding where in the cycle you are so that you, when it's needed, take 100 pips profit, or when it's needed, don't take 100 pips profit, get out of the way, let it go further, and you'll make 2 or 3 or 4 times more money doing no additional work. So it's no additional risk. Okay, that's the alpha side of it. So anyways, a lot has to come together, but I'm trying to train you to be a scientist, not a degenerate gambler. Okay? And every gambler knows that to lose is what we're really there for. Yeah. Yeah, you don't want to be a degenerate gambler. Scientists are mathematicians. In this case, science. Okay? Okay, and it's the scientific methodology of testing and reflecting, confirming or denying. So here's the thing. Mr. Sangam, when we're talking about mathematicians, ideally what you do is you start with a problem and you develop a solution. Many mathematicians find a solution, then go look for a problem. But the second part of it is you test, and you improve the performance. But the interesting thing is, the more you test and the more you improve, the more you're actually just backfitting to get the results, but not the reality. Right? Like you'll tweak this and tweak that, and you get a little more profit. You tweak this, you tweak that, your Sharpe ratio improves. But all you're doing is recognizing what has actually already happened. So you got to be careful. It's not the math per se, because very often when you're going from a math point of view, you're going to not find patterns in the data. You're going to find data to make your pattern, right? Like, I don't know, so you got to be careful. So instead, the scientific methodology is like recognizing the problem, trying something, measuring what happened, and go, oh, that didn't work. Whoa, 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 stop that. Okay, now where we are. Let's try this other thing. Does this work? Okay, that works better. I mean, even being, an old school car mechanic, okay, the car doesn't perform well. Okay, well, is it fuel? Is it air? Oh, it's not fuel. Okay, there's something in air, right? Okay, what could that be? Where does it come in? Air, are we starting on the intake? Are we starting on the exhaust? Like, where would it be? And it's a process of elimination as much as it is as your instinct to fix, okay? Very often a good mechanic will say, well, before we do this, let's try these other things first because it might be them, and that's just cheaper and easier. But before I pull your transmission out, like, let's try these other things, right? So anyways, I want you to think that way. Go through the process. Okay. Alrighty. So if you have that knowledge from me, you should be able to correlate these other things out. What the pound is doing. Looks like the pound has lost all that, CPI nonsense. Okay. Right when you thought, right, it was going to get easy. I told you. So it comes down to, like, what do you want to buy? If you agree with me and you want to sell the dollar, and by the way, I think that's a little dangerous to agree with me. Okay. Oh, yes, sorry, Jim. I had downloaded it, and then I just ran out of time. It took a lot longer to download, but yeah, I'll do that immediately. What is it that you want to buy? What do you want to buy? Okay. I like going through that idea process first. I think many people still go through their charts looking for something to buy, and then they'll see something and say, okay, what is this again? What are we looking at? USD Swiss franc? Okay. Instead, I would rather you look through economic data and say, ooh, that Australian export data is interesting. Okay, well, I wonder if that's in play yet. And then you look at it and you're like, well, it's stabilized. This thing has been down for weeks and weeks and weeks, but it's starting to stabilize, and I see the export data starting to improve. So if that continues, maybe this asset will appreciate. The asset would be you buying Australian dollar. And if it's a perfect storm, the US dollar weakens anyways. Okay, you see? And you're like, oh, well, that might be a really good trade. Okay, so you would look at that and say, well, we're stabilizing here. Okay, we don't necessarily want to trade this with daily pivots, so or even weekly. So we can say, well, let's start planning out next month. Let's start planning September. Okay. So I got to go out a little further, and we're about this price. Why about this price? Because nothing's happened this month. So the thing to be watching for a bull here is, will the bears sell the daily 21? You can see they have been selling the daily 21. Before that, it was sort of the 5-8 sell, right? Sell into the moving averages, sell into the moving averages, sell into the moving averages. And now they're trying to sell it off the 21, like not the 5-8, but the 21. The thing is, as this squeezes and we get closer to an apex, trigonometry, once you get closer to the apex, then there's going to be more of a tendency to step up to the 55, step down to the 21, and now you're Oscar Mike on the move to 77 plus. Okay? So you have to ask yourself, how do you want to play this squeeze? Right now, we're caught between this bottom and a diagonal top. I'll still play it like horizontally though. I still will. Okay? So now it's like, this is where your hypotheses and scientific methodology comes together, and you say, well, if that, then this. And you'll be a buyer at 74. Huh? Okay? And then you'll say, well, based on normal technical analysis, this should go to 77, right? Yeah, it should, but it's going to go farther than that. And you're like, wait, what? Yeah, that's what it says. I mean, look at it. Bullish profit zone. I got you. That's what it says. It's going to go higher than that. Maybe not immediately, but it's going to be worth more than that. Okay? Because let's say this happens by the end of the month. These pivots are going to move up, and we're going to overshoot the aggressive target. Nothing's happened, so there's really no target yet, not even a pivot. But if we get the new volume and volatility, and we're here in, 2 weeks from now, where we've taken this from 73 to 77, then you can start playing around with a high-low close. So obviously we'll have a high. It'll likely close high out of position. And because of that, it'll be a hot open for September. And then probably lots of profit taking going into the September Fed meeting, probably even a week before. And then you got to treat that as separate. So it's more like, hey man, are we going to get to 80 or not? Okay. And so now you're going from, a couple of hundred pips profit maybe on a trade to a couple of hundred pips more profit than you would have. And to me, nothing's different. It's the same trade. That's right. Okay? Yeah, the thing with chess, Mr. Sangam says, hey, kind of like a chess game. The thing about chess is your next move generally isn't what's important. It's what the other player's next move is going to be. And so chess is about, okay, that you think they're going to move this to there, and therefore you would move this to there, and they would see that and then do this to that. But that's what you want, so that this other thing then happens. Okay? It's very much like game theory. So I've studied a lot of game theory, and I think it's quite fascinating, because if both players know they're playing the game, then the game changes. If you signal to the other player, you can get to a different outcome. You may want that different outcome because you're doing it on purpose. Maybe you're not doing it on purpose, and the outcome then but changes. Okay? But there's always these decision trees that you must go through, and then you can assign probabilities. Okay, and then game theory, John Nash will then, you got to remember back when John Nash was developing his models on game theory, which eventually won him the Nobel Prize in mathematics. The prevailing economic models were based on rationality, that the markets are efficient because the markets are rational. But I don't know anybody rational, and the market's for sure not rational. So I think it's really interesting. Now, game theory, you go through and you say, well, if you are rational, there's a higher probability you'll do this move, but you might do this other move. Okay, you see? Because this one's more in your best interest, but maybe you want to play your hand a little differently, so it could be this other thing, right? Probably this, might be that, right? So that's where you assign, let's say, 60-40 probabilities. Well, that all breaks down when you're negotiating with Donald Trump, for example. And that's where a lot of people saw game theory for the first time. So I'm not saying I love Donald Trump or I hate Donald Trump, but as I was going through the class, I saw what he was doing, and I'm like, oh my God, that's the right move. That's the right move. Right in the middle of the game saying, I'm not going to play this game's stupid. Come back and play the new game under new rules. Like, stuff like that. Like, it was very often the right thing. It was just, but the thing is, the idea of rationality, the model breaks down if you're irrational. Like, you might say, this guy's not going to do, the X move because it's suicidal. But what if that person is willing to do that? And you're like, whoa, that's too much, right? But that changes everything. So here's where I'm tying this in. The markets are not efficient. The markets are not rational. Okay? And so we got to be careful. And the way we can control this is to know precisely what you want to do and why you want to do it, because ultimately you don't know what the others are going to do. I think there's going to be massive mistakes made around the September Fed meeting. But what am I going to do? Trade against the mistake because I'm more correct? No, if I go in arrogant like that, I'm going to lose a boatload of money. Okay? And I'll be buried in the sand dune somewhere between Abu Dhabi and Dubai. Hey, where'd Wayne go? Oh, well, he degenerate gambler, right? So instead, I got to be much more cautious of, right? I have to have conviction because I believe in my research, and I have to have conviction in my trade plans because they're solid, well planned out, well thought out. But I can't be arrogant about it so that I trade outside that plan, right? Where I believe I'm correct because I've done all of this and I have so much conviction, but the market doesn't agree, or the market is irrational, and the dollar just skyrockets in value, and the bond markets go crazy, and there's some weird temper tantrum or something, and just the world is shocked. Like, I don't know why people are shocked. The Fed tell us directly. But, dude, doesn't matter. My rationality is probably the weakness, because the rest of the market, in my belief, is irrational. But as a rational player, I have to rationalize their irrationality and do what I can do, which means if the market has turned bearish to bullish and I'm a bull, then I buy dips. If it doesn't do that, get out of the way. Okay? So anyways, that's that. Hey, I'm very thankful for you being here. What a wonderful time I'm having in New York City. Incredible weather, right? The city is wonderful. Everything is packed. Nobody is wearing masks. Unless, you know, I almost, for lunch yesterday, I actually had some free time. I'm like, I'm going to go get some ramen. And I thought, you know what? I can zip over to Grand Central. There's the food court down in the basement. There's a million things going on there. And so I zip over there, and I'm walking down the street, and the streets are beautiful, and the people are beautiful, and the sunshine is beautiful. I'm like, oh my God, the city's great. And then I get to Grand Central, and I go to the main front door, and I'm like, oh my God, it's going to be filled with tourists, all locked into a basement. I'm like, F that, I ain't going down there. Even with a mask, I ain't going down there. Yeah. so I'm like, the other observation is half the city's closed, man. Half of New York, it seems to be like, you might go down 6th Avenue or 5th Avenue, let's say Fifth Avenue. You're walking down Fifth Avenue, and all the big names are open. The big, fashion names. It's like going to a shopping mall. I mean, it used to be like you had to come to New York City to get a Fendi handbag, right? Now you can just go to any shopping mall in America, or any airport for that matter. But New York City's still got the big flagships, right? Okay, all those stores are still there. But when you're between 5th and 6th, there's closed shops, closed restaurants, closed bars, closed hotels. So I wish the best to New York City, and I hope it all comes back. But the people look good. People look good. When will New Yorkers come back to the office? You know what? I don't know, right? Right? Just interesting. So I look at it as an economist. Like I said, I was going to have a business dinner here at the club, and it was absolute ghost town. 6 o'clock, kind of peek into the dining hall, and it's just like, nobody. How'd you like to be in this giant grand hall? 2 people. It was weird. So I'm like, let's get out of here. So it's interesting. And typically it would be packed, right? So full to empty. And the funny thing is, I made reservations 3 weeks ago. They must have been laughing like, hey, Jose, oh my God, this guy just made reservations. And you're like, no way. Yeah. No way, Jose, right? Anyways. But the town looks beautiful. The people look beautiful. You get an Uber, not a problem. Not very many people are wearing masks. Some of the tourists are wearing masks in confined spaces, but again, probably half the steakhouses are closed. So anyways, for those that are going to meet up with me at 5 p.m., you got to be on the list. I will give the list to the security so you can get into the club and you will make your way into the building and up the elevators to the roof, and we can have a couple of cocktails and share a few stories, and I have a few snacks, and I can give you a tour of the club, and then we'll figure it out. I have reservations at a place that offers cocktails and cigars. If people don't want to do that, I'm fine with that. If you're into it, I'm into that too. So anyways, just thank you for being in my life, and thank you for being so dedicated to what you do and your professionalism. Okay. Marina's like, at least you're helping the economy. Yeah, well, I put money into Florida, I put money into Wisconsin, I put money into Illinois, I'm putting money into New York, and I'm tipping, 30% along the way. Just because in many cases, I'm unbelievably lucky to have somebody help. Like, amazing, right? It's amazing to me that people don't have jobs, because every city I've been to in the last 3 or 4 weeks are unbelievably desperate. Desperate. They are desperate for people to work. But I don't know. So whether you bust tables at a restaurant or you develop artificial intelligence, there's jobs. So can't wait to see where this journey goes. So anyways, peace on earth. May the pips be with you. May our profits be above average. Have a wonderful weekend. Okay, remember, go through your trades, do some analysis, and plan it out. Next week is an important week in the year. It may or may not be a turning point, but I would officially call vacation over. Summer is over on Monday. Time to put on your suit and tie. Maybe wake up a little earlier and get your game on, right? Hey, now you're a rock star. Get your game on. Get paid. Yeah. So anyways, see you, and thank you. Yeah. Thank you, everybody. See you later. Yeah, see you. Cheers.